The Iran war is shaking global supply chains and pushing oil past $100 a barrel. Could this chaos drag the world economy into recession and stagflation? You need to know now. The 2026 conflict in Iran has unleashed multiple supply chain shocks. According to Economist Swonk, these disruptions have led to product shortages and higher prices across markets. This mirrors the 1970s energy crisis, with acute supply shortages and currency volatility. As key goods become scarce, prices spike, creating inflationary pressure that hits consumers and businesses alike. Bank of America analysts forecast that oil prices will hover around $100 per barrel throughout 2026 due to the Iran war, even if the conflict ends soon. This sustained high price for oil drives up costs for transportation and manufacturing, pushing inflation higher globally. The result is a toxic mix of rising prices and slower economic growth, increasing the risk of stagflation. Swonk also notes the labor market remains vulnerable in this environment. Typically, weak consumption and investment cool wages and costs. But in this case, wages and prices rise for an extended period due to factors beyond supply and demand like war-driven shortages. This combination worsens stagflation, where inflation and unemployment rise simultaneously, making economic recovery harder. Experts warn that if businesses adopt AI in response to recessionary pressures instead of growth, it could worsen the downturn. AI may displace existing labor during contractions rather than augment it during expansions, compounding job losses and slowing recovery. This dynamic adds another layer of risk to an already fragile economy shaken by supply shocks from the Iran war. Normally, weak consumption and investment would cool wages and prices. Yet, the Iran war creates exogenous shocks that push costs higher regardless of demand. This defies classic economic laws, sustaining inflation and wage pressures over longer periods. This unusual scenario fuels fears of prolonged stagflation and recession risks worldwide. What this means for you is higher prices at the pump and grocery store, more uncertainty in job markets, and a fragile economy that could slow or shrink. Staying informed helps you prepare for tighter budgets and shifting job opportunities. Subscribe now so you never miss how these global shocks might hit your wallet and future.